That intense, almost uncontrollable urge hits. You're scrolling and you see the headline, Michael Burry just bet $1.6 billion on a market crash. Your heart drops. You feel that pit in your stomach, that panic. You're flooded with cravings. Should I sell everything? Is the crash here? Is my entire 401k a lie? You're told you have to have the willpower to ignore him, or the genius to copy him. What if I told you that panic isn't a sign of weak willpower? What if it's a sophisticated signal that you know the market is on a sugar high and you've just seen the doctor's test results? Forget panicking, forget copying. Today, we learn to decode him. Michael Burry isn't a fortune teller. He's an architect. He's a blueprint reader. He's not betting on a crash. He's reading 5 coded messages the euphoric market is completely ignoring. Stay with me, because understanding why he's making this bet is the key to protecting your capital and finally, designing your freedom. Welcome to Wealth Architect. Welcome to the podcast where we don't just follow the headlines, we deconstruct the blueprints. I'm Ben, and I'm here with Dr. Marcus Thorne, our resident economic historian. Marcus, it's impossible to ignore. The man who called 2008 is at it again. It makes everyone, including me, feel anxious.
It absolutely does, Ben. And that anxiety is by design. The media loves this narrative, the genius versus the market. It forces you to feel like you have to pick a side. It's a follower's choice. But for an architect, this isn't a panic signal. It's a data signal. For too long, we've been told that Burry is a gambler or a perma-bear. That's a lie. Burry isn't a gambler. He's a risk assessor. He's not craving a crash. He's reacting to clear, decoded messages from the gut of the economy.
So instead of white-knuckling it and just holding on for dear life, we should be asking, okay, what are the specific signals Burry's reading that everyone else is ignoring?
Precisely. That is the only question that matters. Fighting the feeling of panic is useless. Understanding the data that causes the feeling is where the power is. Burry isn't fighting the market. He's just reading the blueprint better than anyone else. He's not guessing, he's decoding.
Okay, I'm ready to become a blueprint detective. What is the first coded message that Burry is reading right now?
Let's decode the 5 signals that make up the Burry Thesis. Signal number 1, the everything signal, the sugar high. This is the most direct message.
We've talked about the market's sugar high from AI and tech, but this feels different.
It is, because it's not just stocks. It's what economists call the everything bubble. When Burry looked at 2008, he saw one bubble, housing. Today, he looks around and sees multiple bubbles, all inflated by the sugar of 15 years of 0% interest rates and massive stimulus. Stocks are at record highs, housing is more unaffordable than in 2007. Bonds are in a precarious position. The coded message isn't stocks are too high. The message is the entire foundation of the financial system is historically overinflated. There is no safe asset to hide in, which is why he's taking such an extreme position. Signal number 2, the concentration signal, the nutrient gap.
The Magnificent Seven again. Why is this so critical to his thesis?
Because it's the same pattern as 2000. In 2000, the craving for growth was only satisfied by .com stocks. Today, it's only satisfied by 7 AI-driven stocks. This is a massive nutrient gap. The market's health is an illusion. It looks strong, but it's dangerously imbalanced. Burry knows that a building with 7 pillars and no foundation is a death trap. The coded message is, the market is not a strong, broad building. It's a fragile Jenga tower, and one block is about to be pulled.
Okay, So the whole building is inflated, and it's standing on 7 pillars. What's the third signal, the one from the real world?
Signal number 3, the consumer signal, the gut takeover. This is the most big short signal of all. Remember, Burry got rich by reading the spreadsheets. He looked at the data on individual subprime mortgages. He's doing it again. The brain, the NASDAQ, the S&P 500 is euphoric, but the gut, the real economy, is sick. Credit card delinquencies are at a 12-year high. Auto loan defaults are spiking. People are paying for groceries with buy now, pay later schemes. The real economy is sending "I'm sick" signals to the brain, but the brain is too high on AI, sugar, to listen. Burry is only listening to the gut. The coded message is the consumer is broke. The engine of the economy is seizing. The crash won't come from stocks, it will come from the real world.
That is terrifying. He's reading the real spreadsheets. What's code number 4?
Signal number 4, the inflation signal, the hidden tax. This is the one everyone wants to be over. The craving is for the Fed to cut rates, but Burry is looking at the data, shipping costs, energy prices, commodity shortages. He sees that inflation isn't dead, it's just sleeping. And the next wave of inflation will be the stress that finally breaks the system. Why? Because if inflation comes back, the Fed cannot cut rates. They'll be forced to keep rates high while the gut, signal number 3, is already sick. The coded message is the easy money is not coming back. The Fed is trapped, and their only move will be to crush the economy to save the currency.
So the whole system is a fragile, overinflated, consumer-driven bubble, and the cure, Fed rate cuts, aren't coming.
Which leads to the final and most important signal. Signal number 5, the asymmetry signal, the master blueprint. The media says Burry bet $1.6 billion. This is a lie. This is the misdirection.
What do you mean?
He didn't spend $1.6 billion. He bought put options that control $1.6 billion worth of stock, like SPY or QQQ. He probably only spent a few $1,000,000 on the premium for those options. This is the real blueprint. It's not a bet, it's asymmetric insurance. His downside? The premium he paid. Let's say it's $20 million. If he's wrong, he loses $20 million. That's his entire risk. His upside? If the market does crash 40%, like in 2008, those options could be worth $500 million, $1 billion, or more. The coded message? I am happily risking 1% of my portfolio to protect the other 99%, with a chance to make 5,000%. He's not a gambler, he's an architect. He's buying a lottery ticket where he knows the winning numbers.
Okay, Marcus, my panic is gone. It's been replaced by clarity. Decoding signal number 5 just changed the entire game. He's not an all-or-nothing gambler. He's an asymmetric architect. So how do we, the architects listening, use this? The follower move is to go buy put options, right?
And that is the worst thing you can do. You will buy the wrong option at the wrong strike price with the wrong expiration date and lose 100% of your money. That's a follower move. The architect move is to copy his blueprint, not his specific trade. How? First, hydrate first. Build your fortress, not your bet. The panic craving is a signal to seek safety, so do it. The best asymmetric bet for 99% of people isn't a put option, it's cash, just like Buffett. Building a 6 to 12 month cash fortress right now gives you a 5% guaranteed yield from T-bills and gives you the dry powder to buy when the Burry Thesis actually plays out. Number 2, choose healthier swaps. Buy anti-fragile assets. You don't have to bet on a crash, you can just prepare for one. What are healthy swaps for a euphoric market? Pay down high-interest debt, a guaranteed 20% return. Buy assets that are not at all-time highs. Think boring consumer staples, healthcare, or commodities. Buy real things, productive assets. Number 3, practice mindful indulgence. The 1% Cassandra Fund. Ben, if you still have that panic craving and need to do something, control it. Take 1% and only 1% of your portfolio and build your own Burry hedge. Buy a small amount of a crash ETF. Buy a little gold. Satisfy the craving in a controlled, mindful way that doesn't blow up your main blueprint. Number 4, cultivate thesis compassion, the asymmetric mindset. Burry has been wrong, that is early, for years. He doesn't care about his timing, he cares about his thesis. You must do the same. If you build a cash position and the market goes up another 20%, you are not wrong. You are not failing. You are simply early. Your thesis is intact.
This is a design for resilience. It's not about being right tomorrow. It's about being the only one standing in 2 years.
So, let's recap the 5 coded messages Michael Burry is decoding. The everything signal. The sugar high is in all assets, not just stocks. The concentration signal. The market is a fragile 7-pillar Jenga tower. The consumer signal. The gut of the real economy is sick, even if the brain, the Nasdaq, is high. The inflation signal. The Fed is trapped and cannot save the market. And the asymmetric signal. He's not betting 1.6 billion. He's risking a tiny amount to make a massive return.
It's about becoming fluent in the real language of risk, not just the panic headlines. This completely changes how I see his moves.
Excellent. Now, for everyone listening, here's your architect assignment. What is your biggest gut signal that the economy is sick? Is it the price of your groceries, signal number 3, the AI hype, signal number 2, or is it just a gut feeling you can't shake? Share your biggest Burry signal in the comments below.
And if you're ready to stop panicking at headlines and start designing an anti-fragile blueprint, hit that like button, subscribe to Wealth Architect, and share this video with anyone who is tired of feeling like a follower.
Next week, we are doing a deep dive on signal number 3, the consumer gut. We are exposing the 3 cracks in the real economy, from buy now, pay later debt to auto loans that could trigger the entire Burry thesis. You won't want to miss that blueprint. Thank you for tuning in.